How to create a cash flow forecast in Google Sheets. Previously, when I wrote if cash is king, cash flow is a river of kings, I showed you how to get the layout done. Now we're going to actually do the forecast, right? We didn't forecast anything. Everything we're looking at so far here on the screen is still historical. So we need to get from a history report to a let's make history report. The first thing we need to do in getting this set up properly is a little bit of housekeeping. We want to get our timeline set up in such a way that it's dynamic, that it can easily be updated, such as by copying and pasting across to the right, and so that it advances the month, so I don't have to do it all manually. So the first thing is we need to get an actual date in here. Notice the export from QuickBooks Online came in with just a generic text description of the date. So let's put 10/1/16, and you want to do the first of the month because every month has a first day, but not every month has the same last day, right? The first month, of course, always needs to be hard-coded. Now we write a formula, and we say equals date, right? So the date formula will put in a date-based value where you can make it dependent upon something else. So basically I want to take whatever's to my left and add 1 to the month, right? And that's a clue for how we're going to write this. Notice that the syntax that it's asking for now is based on the year, the month, and the day. So I want to first take the year, and the year itself is a formula, right? So I can take the year of whatever's to my left, comma, the month, open parentheses, click to whatever's to my left, right? The month of B5. Now I want to add 1 to that. Remember, I need the month of whatever's to my left plus 1, comma, and then we need the day, right? Because that's just needed for the formula. So I hit enter, and sure enough, it gets me exactly what I'm looking for, which is the next month. I can copy that to the right now, and it updates perfectly so that then I can take this out as far as I want, go all the way out to the end. It stops at October 2018. Let's get 2 more columns inserted here so I can get it out to December and have a little bit of breathing room there to my right. Right? So actually I'll need 1 more column if I want that breathing room. Okay, so that's October, November, December. Perfect. So now I have a good timeline laid out there. And once that's done, I don't have to do it again. Let's just Control-C to copy, go to my profit and loss, Control-V, paste it in. And then statement of cash flows, same thing. Control-V, paste it in. Now the other thing we may want to do is format this a little different. You may be fine with the date format looking the way that does, but if I highlight the whole range, and under format we go to number, and we go to more formats, and then more date and time formats, you can be pretty specific as to what these dates look like. Now in my case, I like the double-digit month and double-digit day as what I want to use. The other thing you can do is I can do the month as an abbreviation like this, right? And then I'm going to click in here. Notice my cursor is flashing. I'm actually editing this. We'll keep the year. I use my left arrow. I'm going to get rid of the forward slashes and the days. So I have just month, and we can do space dash space year. So we have just month and year, and if I click apply, now you can see what that looks like, right? And actually, for some reason, I thought I was getting the quadruple digit year. Let's fix that. All right, because it might be that somebody's looking at that and thinking, why is it all on the 17th of the month? So let's make sure it's 1000% clear. We're going to go to number, more formats, more date and time formats, and we're going to do the year in 4-digit format. That way it's just super clear. And then let's widen these up so you can actually see them. See, I think that looks much better. Now I can copy and paste that again to update the others. Perfect. So that's really what I want to stay focused, where I want to kind of stop in terms of the housekeeping. The next thing is we need to copy the formulas out and just get filler data in here, right? So if I copy this all the way out to the right, that's fine. We'll get rid of the last one. Okay, now the equity section is going to be a little tricky. We'll assume the opening balance equity will not change, right? The retained earnings we can also assume will not change. Here's the tricky part, is the net income line in equity. Net income you normally think of as something that's from the profit and loss. But on the balance sheet what this really amounts to is an accumulation. It's the closing entry really that happens each month, where we're taking the net income for the period from the profit and loss and closing it out to here, but then it gets accumulated. So it's not just that month's net income from the P&L, it's the prior month. So we take February, plus we need March's net income from the profit and loss, which right now is 0, and we copy that across. Right, and then let's get the profit and loss filled out. So by the time I'm done with this video in another minute, we'll have the entire template complete so that now you can go line by line and start building out the schedules, and that's what we'll actually take a look at in the next video. So for now, for the income, we're going to leave that alone. We'll just find the total income line, which is here, and we might even want to color code this so that we know this is kind of where the assumption is, at least for now. Right, and don't mind the ugliness of the colors, but we can just say, give me, again, an average, or let's just say this should be equal to whatever it was last year, right? Do we go back far enough to do that? No, we don't. So for now, we'll do an average, and then what's really going to happen in the next video is we're going to take a look at how to actually build out the cash flow projection for sales, and we're going to look at a lot of these kind of line items to see how it gets done. Right, and for a lot of these other kind of things, normally we would use an average. Since we don't really have a lot of data to work with here, we're just going to end up setting a lot of things equal. Okay, now we've got that in here. Let's go to the balance sheet. Notice now the net income line here does in fact accumulate, but the main thing we want to check now is, first of all, we want to make sure the balance sheet still balances. So we have to do a check here and see, do the total assets differ from total liabilities and equity? So we just do a quick subtraction, copy that across. Okay, and what often happens is what you're seeing here. It's off slightly, right? And the difference keeps accumulating. And there's a good answer as to why, but first we need to check the statement of cash flows. The statement of cash flows is in fact balancing, but you know what's also missing is the rest of this. So where is it getting its cash from? It's not, right? Because we have to copy all these formulas all the way across now. And that may not even be the whole answer. We're going to see. Okay, and it's a good sign we're all balanced here. Let's see if we're now better balanced on the balance sheet. The balance sheet is completely balanced. It was out of balance initially because the statement of cash flows was not yet complete for these projected periods. So now we have a completely balanced and built out template, and we're ready in the next video to start actually creating the assumptions and building out schedules. So if you've been following along, of course the write-up has the link to the part 1, if cash is king, cash flow is a river of kings. You can start setting up your own based on what you see here, and then follow everything along. Get to a place where your template is built out to the same place this one is, where you've got everything projected now, and the balance sheet and the statement of cash flows all balanced. And once you're there, you'll be ready for the next segment that we're going to do, which is going to talk about how to actually build out these schedules. As always, if you have questions, post your comments below wherever you happen to be watching this. If you're on YouTube, check the link, check the description for a link over to the blog so you can actually read the write-up and get that description that I talked about with the link back over to the predecessor to this part 1. That's all, folks. I hope you had some fun and learned something along the way. I hope you're having an absolutely fantastic day, and I look forward to seeing you on the web.